Germany once ruled as Europe's top economic force, known for its smooth industry and steady strength. But today, something's shifted. The UK, despite Brexit chaos, political shifts, and rising prices, is moving forward. Why is that? Why is the UK economy beating Germany's in 2024? The UK economy jumped 1.1%, while Germany actually dipped. The IMF and OECD now predict the UK will outpace Germany, not just this year but far into the future. Plus, the Centre for Economics and Business Research says the UK will top all of Europe over the next 15 years, with Germany sliding down global ranks. So, what's driving the UK's unexpected lead? Is it just quick gains, or is a lasting power change taking shape? Let's break down the figures and the future that might reshape Europe's economic map. When comparing the United Kingdom and Germany, two of Europe's leading economies, the gaps in performance have grown sharper in recent times. Both countries have long held strong roles in Europe, with Germany famed as the continent's industrial leader and the UK as a financial and services giant. But recent economic signs show diverging paths that highlight deep structural differences in the effects of recent political and economic choices. Starting with GDP, the UK's economy by Q4 2024 has risen 3.4% above its pre-pandemic mark, a solid recovery, though less striking compared to the Eurozone's 4.9% in Germany, which lingers 0.1% below its pre-COVID peak. That's a warning sign for the EU's biggest economy. Now, looking globally, the US has soared past both with an amazing 12.2% GDP growth since the pandemic, setting a tough standard amid rising global protectionism and new US tariff impacts. Moving to 2025, what's ahead? The IMF isn't hopeful, trimming the UK's 2025 GDP growth forecast from 1.6% to 1.1%, blaming higher tariffs and local issues. The OECD shares similar gloom, expecting just 1.4% growth in the UK. Germany fares worse, with the IFO Institute projecting a mere 0.2% growth in 2024 and 0.8% in 2025. So, what's happening in Germany? It remains Europe's largest economy at $4.71 trillion in 2024, a giant in manufacturing and exports, especially vehicles and chemicals. Yet, the machinery is stuttering, demand is weak, global rivalry is intense, and political uncertainty adds strain. Meanwhile, the UK economy, valued at $3.56 trillion, isn't cruising either but appears to handle things slightly better. Unemployment stays surprisingly low in both nations despite economic ups and downs, with tight labor markets leaving employers scrambling for skilled workers. So, at least here, the outlook is half positive. Inflation paints a different picture. In March 2025, Germany's inflation hit 2.2%, close to the European Central Bank's ideal. The UK, though, feels the burn, with inflation climbing to 2.8% in February, putting pressure on households already facing high living costs. Speaking of costs, if you think Munich is pricey, try London. The UK capital leads Europe's cost of living rankings, with other UK cities close behind. German cities, while not cheap, remain more budget-friendly. So, as we size up these two heavyweights, it's clear both are sailing rough waters. The UK might edge out in short-term growth, but long-term issues persist. Germany still wears the industrial crown of Europe but struggles with stagnation, high labor costs, and growing investor doubts. Now that we've mapped the economic terrain of these two giants, let's dive deeper. What's fueling their performance? Let's explore the structural strengths and hurdles that shape the UK and German economies. If you're curious why Germany, once Europe's industrial titan, is now trailing the UK in economic growth, it's time we peek under the surface and see the real story. Yes, the UK economy grew 1.1% over the past year while Germany shrank by 0.1%, but don't rush to pick a winner. Both nations face serious challenges. Let's start with Germany. For decades, its economy thrived on affordable Russian gas and a booming export market, especially in engineered products like luxury cars and industrial tools. But that engine stalled in 2022 when Russia halted natural gas supplies. With energy prices soaring, Germany's heavy industries took a hard hit. To put it in perspective, industrial electricity now costs German firms about 20.3 cents per kilowatt hour, more than double what rivals pay in China or the US. That's not just a hassle, it's crippling for sectors like steel, chemicals, and glass. Renewable energy hasn't ramped up fast enough to fill the void, bureaucratic delays and opposition to wind turbines have slowed progress, and infrastructure like hydrogen pipelines remains mostly theoretical. Then there's China, once Germany's top buyer, now its toughest competitor. In the early 2010s, China was a treasure trove for German automakers and equipment makers, but today, Chinese firms lead in EVs, solar panels, and machinery, all backed by state subsidies. Germany's net vehicle exports have dropped by half since 2020, while China now exports 5 million vehicles yearly. It's a harsh turnaround. Germany also slipped up, it grew complacent. Years of budget surpluses led to underinvestment in infrastructure. Trains are often late, high-speed internet lags in rural areas, and the workforce issue looms large. Nearly half of German firms say they can't find skilled workers, with fewer students entering STEM fields and an aging population adding pressure. Even when companies seek foreign talent, red tape makes it a nightmare. It's a skills shortage that's stifling growth. Meanwhile, in the UK, things aren't all bright, but the engine runs a bit stronger. The UK's growth gets a boost from a hefty £32 billion fiscal package announced in the latest budget, sparking short-term gains in public spending and consumer buying. Business investment, though hesitant, should pick up by 2025. A weaker pound also makes UK exports more competitive globally. But this lift comes with a price. Inflation in the UK sits at 2.6% in March 2025, compared to Germany's 2.1%. Wages are rising, good for workers, but businesses pass those higher costs to consumers. A 6.7% jump in the national living wage and a 16.3% rise in the minimum wage for young adults are driving up expenses, likely keeping inflation high through 2025 amid energy costs and trade uncertainty. Speaking of trade uncertainty, US tariffs threaten to ground the UK. About 16% of UK exports go to the US, and with Trump's proposed 10% tariff wall, British goods like cars and pharmaceuticals face a hit. So where does this leave us? Germany wrestles with structural issues that won't fix quickly: energy reliance, underinvestment, a shrinking workforce, and fierce competition from China. The UK shows some vitality, but that drive is fragile. Inflation, trade tensions, and limited fiscal room are looming threats. The bottom line: both economies are in flux. Germany is trying to reinvent itself after a major energy shock and shifting global trade, while the UK pushes growth with stimulus but risks a fiscal challenge later. The next key is how governments handle shocks and how outside pressures like tariffs and politics steer the course ahead. Let's examine the defensive moves and bold plays reshaping both nations. Let's start with Germany. For the second year running, Europe's engine stalled. German GDP fell 0.2% in 2024 after a 0.3% drop in 2023. What's driving this? Look straight to Washington. On April 2nd, President Trump unleashed a policy surprise: 10% tariffs on all UK exports, 20% on EU exports, as part of his new global trade plan. Germany, with its export-driven economy and heavy US trade ties, took a big hit. Car manufacturing and farming, two German pillars, are now under strain. But Germany isn't the only target. Across the channel, the UK was just starting to recover from a long stagnation. Real GDP rose 1.1% in 2024, but inflation stayed high at 2.5%, climbing to 2.8% by February 2025. Then came the tariff shock. According to EY, UK GDP growth is now pegged at just 0.8% in 2025, down from 1%, with the 2026 forecast cut from 1.6% to 0.9%. Businesses are pulling back on investment, households are holding off on spending, and the cautious hope from earlier this year has faded. Facing rising threats from Russia and doubts about America's commitment to Europe under Trump, Germany isn't standing still. In March 2025, the Bundestag and Bundesrat approved a huge €500 billion spending plan focused on military power and civilian upgrades. The UK is stepping up too. It signed the Trinity House Agreement with Germany in October to strengthen joint defense. With policies moving and trade tensions rising, both economies are preparing for what's next. But which nation is better set to lead Europe's economic push? Let's turn to the forecasts and long-term views to see who's poised to take the lead. Who's going to win Europe's economic race? That's the billion-euro question on everyone's mind. On one side, we have the UK, fresh from a government switch and betting on daring reforms. On the other, Germany, Europe's classic industrial leader, trying to shake off 2 straight years of decline. Let's explore the outlook. Starting with the UK, it's been a rough stretch. Growth slowed since Labour took over in July 2024, but by 2025, there's a hint of hope. The OECD predicts Britain will grow 1.2%, outpacing Germany, Japan, and Italy for the year. But it's not all clear skies. Inflation remains tough, with the UK likely to lead G7 nations in inflation through 2025. The US has hit British exports with tariffs, targeting cars, steel, and aluminum hardest, and GDP growth is now expected to drop to 0.8% in both 2025 and 2026. So, the UK might beat some rivals but is navigating economic bumps. Germany, meanwhile, faces deeper structural woes. The economy shrank 0.1% in 2024, marking a second year of decline. Manufacturing demand is low, investment is sluggish, and consumer confidence has slipped. Construction is faltering, and even with a 2025 rebound, growth is forecast at just 0.7%. below the UK's 1.2%. Labour data adds to the tale. Job openings fell by nearly a quarter, real wages are up, but fiscal pressures grow. The German government deficit improves from 2.6% of GDP in 2023 to 2% in 2025, but rising defense and social spending could tighten public funds. Looking ahead, the Centre for Economics and Business Research, CEBR, offers insight. By 2039, the UK is projected to stay the world's sixth largest economy, ahead of France and closing in on Germany. Germany's economy will remain bigger but only by 20%, down from today's 31% lead, while the UK is expected to outsize France by 25% in output. The International Monetary Fund and OECD share guarded optimism, seeing global trade recover, inflation ease, and rate cuts boost growth, but they warn of high debt and geopolitical risks. So, who's winning the economic race? Right now, it's a tight race, but if forecasts hold, the UK might pull ahead over the next 15 years, even if it's not at full throttle today.